Welcome back, and let's talk about one more current liability. This time we are talking about payroll related liabilities. What we're looking at over here is in addition to the salaries and wages that the employer pays their employees, they have certain other liabilities that they have to take care of. All of these are current liabilities. So let's take a look at what we have over here. So the company has legal requirement to withhold taxes from employees' paychecks unless the employee specifically gives in writing and says, I do not want any taxes withheld. But in some cases, an employee cannot say, I don't want the taxes withheld. We'll take a look at the different examples. There are legal requirements for payroll taxes on firms. So in addition to what the employee pays in taxes, the employer also has to pay in taxes. The employee may also decide that they want some monies taken out of their account and given to third parties. So there are all kinds of things that a company has to take care of, which is why there are companies that specialize in payroll. You've heard of a lot of these payroll companies. You contract out to these payroll companies and they will take care of all of it. So again, payroll related liabilities, there is employee withholding taxes, employer's payroll taxes, and voluntary deductions. So let's talk about the employee withholding taxes. Employer is legally required to withhold federal and state taxes. This is the one that an employee can choose to have more or less withheld. But that's the form W-4 that you fill out and give your employer to make those adjustments. Social Security tax, you have no choice. You, the employee, have no choice, and the employer has no choice. They have to withhold from your paycheck and give it to the government. And there are withholdings from the employees' paychecks. So now these monies that they collect, these are definitely current liabilities. They're definitely liabilities, and they're current liabilities because they're due to the relevant authority, taxing authority, whether it's a state, local, or federal government, the money has to go to them. So there are various reasons why this becomes complicated. Start with, depends on how much an individual employee makes. And then depends on the number of exemptions an employee claims. That's the one I told you, you can adjust this number up or down. So that changes depending on how many kids you have, dependents you have, depending on the state you're in, if you have other income, all of these could cause the numbers to go up or down. So let's talk about the Social Security taxes. That's from the Federal Insurance Contribution Act. This requires employers to withhold a percentage of the employee's earnings up to a specified maximum. I'll talk about that in a few minutes. The employer has to pay a matching amount. So the employer and the employee both pay FICA. What happens if you're self-employed? All the gig workers, you're self-employed as a gig worker, you have to pay the employer and the employee portion. Right now at tax time, we have lots and lots of people who get very upset because they owe money. That's because they were not withholding any tax, and not just their portion, they have to pay the employer portion as well. So that's what we're going to look at now. What could be some of the voluntary deductions? Let's quickly look at it. Union dues, contributions to savings or retirement plans, insurance premium. All of these are liabilities in the books of the employer until it's paid to the appropriate organization. The employer has to pay that FICA taxes. Now, there's one more tax that the employer pays that the employee does not pay. So I, as an employee, don't have to worry about this, but the employer has to worry about this. And this is the unemployment tax. So when people are laid off, you hear of people getting unemployment checks. Well, someone has to pay for it. So employers are funding that unemployment insurance that's there, that the government has. They pay a portion to the federal and a portion to the state. The federal portion is smaller and no one gets a break on that number. The state unemployment, the rate at which you're taxed, you the employer, that varies by the state you're in, and the state changes that time and again. And we'll see what those numbers are. And there could be some fringe benefits as well that could be paid. Now, with that, let's get back to an exercise and see how we can understand all of this and how we will work through the numbers. So before we get to this, I just want to talk to you quickly about These numbers change by the year, but for the year 2023, the current year that we're in, the maximum amount of income that is taxable for Social Security. So each of us as an individual, when we work for a company, right now, the maximum income that is subject to tax is $160,200. So the first 160,200 that you make is subject to, wait for this, 6.2%. If you're self-employed, you're subject to 6.2 plus 6.2, the total amount. So the maximum tax one could pay is $9,932.40. So what does this mean? If I make less than 160, let's say I make 100,000, that's still a good number. I make 100,000, I pay 6.2%. If I make 170, let's just say the number is 170,200. I have made 170, well, one more zero is needed there. I made 170,200. This is how much I made. No, my zero is in the wrong place. Let me just quickly correct this. Okay, so I made $10,000 in excess of the limit. The maximum Social Security tax I will pay is this 9932.40 because that 10,000 that I went over, that's not subject to the Social Security tax. That's what this limit means. Now there's also the Medicare tax that is paid, and that's 1.45%. What's the Medicare limit? That is, on what income will I be taxed? Well, fortunately or unfortunately, all of your earned income is subject to Medicare tax. So whether I make 10,000, 160,200, 170,200, or I'm one of those 1%ers that makes, let's say, a few $1,000,000, all of that is subject to the Medicare tax. Anything that's earned income is subject to the Medicare tax and Social Security tax. Medicare, all of it. Social Security, only the first 60,200. Now let's take a look at our exercise over here. Here we have Lee Financial Services that pays employees on a monthly basis. Payroll information is listed below for the month of January, the first month in our fiscal year. They're telling us assume that none of my employees have exceeded any of the relevant base pay, such that all benefits percentages apply to the entire $500,000 payroll. So basically what they're saying is my employees, no one employee made more than this 160,200. So all of it is subject to that Social Security tax and obviously the Medicare tax. I have withheld $100,000 of this on behalf of my employees. I withheld it for federal taxes. These are the unemployment tax rate for the federal and the state. If you recall, I told you that the federal and state have their rates. The federal, they're telling us, is 0.6. The state is 5.4. The state may decide to change the rate, lower it, but the federal never lowers that rate. Social Security is 6.2%. Medicare is 1.45%. So let's get down to business and do our journal entries. January 31st, the end of the first month, my salaries expense is $500,000. That number was given to me over here. Now, of this $100,000, I'm not paying all of it to my employees because first thing is they asked me to withhold federal income tax based on the W-4 form they had filled out, and that amount worked out to $100,000. That number is again given to me. The unemployment taxes are paid by the employer, not the employee. However, they have to pay these taxes. So I'm withholding that on their behalf. Social Security tax withheld is 6.2% of the 500,000. So that's 31,000. I also withheld the Medicare tax. That's 1.45% of the 500,000. That's 72,500. And the balance is salaries payable, or I'm going to write cash credit if I'm paying cash on the 31st of the month. So the employees have earned 500,000, but what they're getting by way of cash from me is 361,750. I shouldn't get excited thinking that I'm not paying 500. The remainder, these are all current liabilities, and they will go to 3 different government agencies. I'll have to send the money out to them. Now, my bill for the payroll is not 500,000, it's more, because on this 500,000, I have to pay payroll taxes. So this number that I have over here, the Social Security and Medicare taxes, guess what? The employer pays it and the employee is going to pay it. Okay, so the exact same numbers that the employee paid, I got to pay to, I'm the employer and I have to pay that as well. So if you're self-employed, you would pay 31 plus 31, 62,000. And then this 7250 plus 7250, all of that is what you will have to pay if you're self-employed. Let's get back to the case here. We're not self-employed, we're the company. Now, we also have to pay as the employer. I also have to pay these unemployment tax. The unemployment tax, the federal unemployment tax, and the state unemployment tax. The federal is 0.6% on the 500,000 again is 3,000, and the state is 5.4%. That works out to 27,000. When you add up all these payables, by the way, these are all payables, is 68,250. So what is the total cost for the employer? Payroll cost, salaries and expense, and payroll tax expense, when you put it together, it says 500,000 plus 68,250. That's a total expense for the employer. And if you have noticed, we don't have any fringe benefits added over here. If the employer pays for health insurance, etc., as an employee, when you see from your paycheck some amount is being taken out, typically the employer is also paying, and usually they pay the larger chunk. In most cases, they pay the larger chunk. So again, this is an example of payroll related liabilities. These are all definitely current liabilities, and you must pay these monies to the relevant government agency or whoever the third party is. Usually it's within 1 to 3 months the payments are made. The larger the employer, the sooner they have to make the payment. So if you're a Walmart, you're not given 3 months to make these payments to the government. You have to pay them on a monthly basis. Because remember, the government needs the money. That's how they're going to run their business. Okay, so for the government to operate, they need the money, the tax money. So the larger you are, the quicker they want the money. Smaller employers typically have 3 months to make the payment, but certainly it's a current liability. So this ends the topics, the videos on current liabilities for now.